Let's get more on this with someone who's got more than 30 years experience covering the oil industry. David Lennox is a resource analyst at Fat Profits. He joins us now from Sydney. David, very good to see you. What do you think is going to come out of this meeting? Are they going to raise production?
Look, this is certainly one of the most difficult meetings to call in terms of what they are going to do with production. We do believe that ultimately we think production will probably remain unchanged, and that will be a situation that we've now seen across many meetings. The reason we say that it will be unchanged is because we do think at the moment the global production of oil and the global demand for oil is probably somewhat in balance, and the OPEC countries at this particular point in time are producing probably 3 to 4 million barrels above their daily production quotas anyway. So we see no reason for them at this point in time wanting to lift that production level and lift their quotas accordingly.
Well, when they're producing so much above those quotas of course lose credibility. Should they not raise just to get them closer to the actual levels of output?
I guess basically what we've seen in the past, Lindsay, when the quotas have been moved either up or down, members of the OPEC cartel do generally produce at their current production rate when the quotas are moved. So really what happens is that they're just giving the opportunity for members who perhaps are hawkish or members who are less hawkish to just continue doing what they're doing. So we can see no reason going forward for OPEC to want to change its quotas. The only reason it would perhaps is that it would like to be seen as being perhaps a benevolent supplier of oil to the world and keep oil prices at relatively low prices.
Well, not just benevolence, they also don't want to see demand destruction. I mean, there's been some evidence of that in U.S. gasoline demand recently. The global economy's hit a soft patch. The World Bank's just revised lower its forecast for the global economy. Isn't there a danger here?
Certainly we've seen US gasoline usage probably since about 2008-9. It has been very sloppy, let's say, and it hasn't in fact improved significantly through the early part of 2011. But what we have seen is that the slackness in the US has actually been taken up by growth in demand coming out of the Asian region, and basically I guess we're looking there at China and the move from I guess two-wheel transport to four-wheel transport and the increase that brings.
Well, you could even argue that, China and India are trying to slow down, so you could actually see some kind of decrease in demand there. But let's move on. Let's talk about Libya. How important is Libya going to be? Because, of course, we've lost production mostly from Libya, but that could come online.
Yes.
This thing could end any day now.
Look, we don't think that the Libyan situation is going to end. We do, in fact, if you had to, I guess, look into the future, we could end up with a divided Libya, one way or the other. The impact, however, on oil has been only about 1 million barrels a day loss, and that can very readily be covered by Saudi Arabia and the other OPEC members. So the shock impact from the disruption there has, as the circumstances in Libya have been drawn out, have basically diminished significantly.
All right. David Lennox, resource analyst there at Fat Profits, thanks so much for helping us
Lindsay.
understand this very important OPEC meeting.